Hi, everybody. This is Bob Iacino along with Mike Arnold from Path Trading Partners. This is a weekend update covering the futures markets for May 28th. Thank you for watching our Path Chats. If you're interested in a quick review of last week and a preview based on the economic calendar for the upcoming week, please check out about the first 12 minutes or so of the FX Weekend Update Path Chat that should be on our YouTube site already. We cover the entire economic calendar. Also, just a reminder for those of you that are not in the U.S., this is the Memorial Day weekend where we honor veterans past and present here in the U.S., so there's not going to be much market activity out of the United States side of things, out of the U.S. side of things. And again, if you served, sincere thank you from all of us at Path Trading Partners. Again, I covered everything that I wanted to cover in that FX Path Chat. There's one more piece of news in between the recording of the two. Angela Merkel, Chancellor of Germany, said at a campaign rally today, the times in which we can fully count on others are over, as I have experienced that in the past few days. She basically said that Europe must take its fate into its own hands. The time in which we could completely depend on others are on their way out. I've experienced that in the last few days. We Europeans truly have to take our fate into our own hands. While Germany and Europe would strive to remain on good terms with America and Britain, we have to fight our own destiny. Some of the news outlets are already painting this as if Germany has given up on the U.S. after Donald Trump's trip to the G7 summit and to NATO. We'll see how that plays out with the markets. But in the meantime, let me turn it over to Mike to let you know what he's seeing on the futures charts. Mike, it is all yours.
Thank you very much, Bob. So for this weekend review, I thought we'd start with a weekly chart of the VIX, closing this week at 981. You can see that the last week's blip was just a blip, nothing much on the charts. Now let me switch out to a quick 20-year weekly chart, 981, which is right about here. If you scan across, there are a couple lows below this, but there's no closing level. This is the lowest weekly close, at least on the 20 years of data on our charts. Just thought that was very interesting. Switching over to the transports, pretty much recovered its whole down move, stopped for a high right near our significant level and GAN level. So on a continued push up on Tuesday, since Monday the transports won't be tracked due to Memorial Day holiday, 91.92 will be first level of resistance, then 9200. Then if that's broken, we can really watch for this potential gap fill over here, which we'll be looking for 9250 area and then the 93 area, 9300. On a pullback, be watching for first level support. We can watch for Friday's lows about 91.40. Then below that, we're going to be looking at about 91.20. Then nothing till we get back to the flat, slightly upward 50-day moving average exponential and significant level at about 90.80. And then if that's broken, we'd be watching for about 90.50 again. Switching over to the industrials. Industrials narrow range on Friday, not an inside bar, made a lower low than Thursday. If we continue an up move on Tuesday, we're going to be watching for 21,100 first level resistance, then about 21,170, then looking for 21,200 to 204. So those are going to be your key levels we're watching for. On a pullback, we have some support right around this 21,050 level. Then we'd be watching for 21,020. Then 20,980 to 20,967 to 70. Then on a bigger drop, 20,925. Looking at the S&P E-mini futures. Friday, inside day didn't exceed Thursday's high or low. So on a rally back up, we'll be watching for a retest of Thursday's high, 24.1775 first key level. If we get above that, next GAN projections up 24.30 followed by 24.42. We revised the charts this weekend to give you all updated levels across the board. On a pullback, 24.02 to 2400 is key. Then the top of the rising rotation zone about 23.99. Then 23.94. And on a very big drop, 23.89 level. Over to the NASDAQ. NASDAQ did make new highs on, let's see, let me just double check that to make sure I give you the exact. So high on Friday, 57.96.50. Yep, 57.95.50 on Thursday. So it made a dollar higher move. Okay, let's go through the pullbacks first in the NASDAQ. If it pulls back, we're going to find very minor support right around 57.72 area. Then 57.40. Then 57.27, then nothing back. That 57.27 is going to be very key. It's a prior breakout zone and rising 8. If that's broken, 56.85 area is going to be key. Now for rallies up, these are the new projected levels higher. Since we're in uncharted territory, we have to use GAN projections. 58.52 first level, 59.08 second level. Switch over to crude. Crude oil, as you recall, had the big sell-off on Thursday, dipped down a bit on Friday, then rallied up back above our significant level, but ran into resistance at 25% GAN level. So that 49.92 area is going to be key. 49.92 to really 50.01 is the first levels of resistance on a push higher. Then we'll be looking for 50.26. Then we'll be looking for a retest of our significant level right around 50.78. Then we have another GAN cluster at 50.98 to 51. On a pullback, 48.91 to 48.76 are going to be key support levels. If that's broken, watch for something around about 48.20 and then 47.88, and on a much bigger move down, 47.67. Switching over to copper. Copper's really been caught in this range for the last few days. You can see it's really defined a range between about 255.80 and 260.40 area. So those are the key levels we'll be watching it to get breakout of. If we do get above this 260.40 rally up through there, we'll be watching for 261.84 to 262 area. Then if that's broken, we'd trigger a very short trend line trade and be looking for about 263.83 followed by 264.63 and then the full eventual target 266.14. If we head lower, 255.88 first level of key support, 254.68 next level, and then we have end of a clear path 253.49 as a target. If that is broken, 251.58 should be our next key area. Over to gold. Gold, nice rally on Friday, getting above the significant level, which we were watching for a break either above or below our significant levels. Moving essentially to the end of the clear path. Now we don't actually have a trade yet into the next clear path, but we can roughly look for some targets. 1272 is going to be first level resistance. If that's broken higher, we'll be looking for 1276.50. And then above that, 1282, which are prior breakdown zone. Then we get into the 1285 area, declining trend line and GAN level. Pullback, 1265 to 1265.50 is going to be very key. Then we're watching for 1261. And on a bigger pullback, about 1259. And finally back down to rising 8 and Friday's lows about 12.55. If that is broken, you could probably see it go down to possibly 12.51 again. Over to silver. Silver, we are in the midst of a trend line trade that was triggered here. Hit our first target of the other trend line, came down, caught in the rotation zone, closed above that new trend line defining point, and hit the 50% GAN level. So that about that 1735 to 1736 is going to be key resistance. Then we'd be looking about 1756. Then our first target on this next trend line trade, 1768, where we have the 200 coming in with a GAN level of 62.5%. So those are those major levels. On a pullback, 1722 first level support, 1715 next level. Then we'd be looking for a drop to 1706 to the 1703 area. And if all that's broken, we'd be watching for the 1698 area. That's all we have for you. Hope you are having a great holiday weekend if you're in the United States, or you're having a very relaxing weekend wherever else you are. And I'm turning it back over to you, Bob.
Thanks for that analysis, Michael, and thank you guys for watching. We will talk to you guys in the next Path Chat. Cheers, everyone.